Stop refreshing your exchange app praying for a miracle bounce from $73,000. If you hit that green buy button today, you're walking your entire portfolio straight into a slaughterhouse. I'm going to show you exactly why the smart money is secretly dumping on you and why the real crash has not even started yet. Right now, Bitcoin is at a massive support zone, and if you look at the short-term charts, it actually looks like we might bounce. We have a double bottom pattern, a liquidity sweep, and my indicators are flashing green buy signals on the hourly time frame. Usually these signals works perfectly, and we might actually see a small bounce up to $75,000 or $76,000 based on the Fibonacci levels. But do not let this fool you. I'm absolutely not buying this. I'm sitting in a massive global short position. I told you in every video that a severe bear market was coming. I entered my short perfectly at $80,600 and I just moved my stop loss safely down to $78,000 behind the recent week. I'm perfectly comfortable because the global trend is completely broken. Look at the weekly time frame because it's your best indicator. The trend was green all the way from $20,000 to over $100,000, but when we broke below $107,000, the trend flipped red. I made over $60,000 on my first short right there. That recent fake pump to $82,800 did not change the weekly trend at all. It just confirms that the bear market is continuing. If you are brave enough to bet on a tiny local bounce, you must use a tight stop loss because the floor is about to fall out. The next critical support is $72,000. If a big red candle breaks that line, there are absolutely no strong supports left. We will drop straight to $70,000, and my ultimate global target is a crash below $60,000. How do I know this is a trap? Look at the funding rates. The funding is completely positive right now, which means too many regular people are betting the price will go up. The long to short ratio is at 1.7. On platforms like Hyperliquid, the ratio is 2, meaning there are twice as many buyers as sellers. Retail traders think this is a great discount, but history shows us that major market reversals always wipe out at least $1 billion in liquidations. The recent drop only wiped out $800 million. That means the market still needs to hunt down hundreds of millions of dollars from retail buyers before this is over. Do not trust the liquidation maps blindly when we see that there is no liquidity lower, because we have positive funding and positive long to short ratio. That means that there are too many people to liquidate at lower prices. The big institutions are already running for the exit. BlackRock just sold 2,500 Bitcoin in a massive block, and yesterday they sold another 3,600 Bitcoin. ETFs are showing outflows every single day. On-chain data proves that more Bitcoin is flooding onto the exchanges while stablecoins are leaving. Supply is rising and demand is falling. The math is simple, and it means growth is practically impossible right now. And it is not just Bitcoin. Look at Ethereum. It just collapsed below $2,000 yet. Regular people are still suffering from fear of missing out and trying to buy the dip. They are going to get punished. Even giant crypto funds are panicking. Trend Research Fund just sold their Compound and Uniswap tokens at a massive loss. They bought Uniswap at $9 and Panic sold at $3. When major funds are capitulating and selling in the red, there is absolutely no positive momentum left in this market. I just showed you exactly why this local bounce is a fake and why the big drop is inevitable. Stay incredibly careful, hold your short positions, and tell me in the comments if you want me to analyze altcoins next or keep focusing on Bitcoin.